what I think is going to happen is a ground up revolt, intellectual and emotional, in governments. Average guys hurting, and I'm not talking just lower income, but middle class are hurting, and this is not getting better. When that stuff hits the fan, all norms of who's in charge here or there suddenly go out the window, and the norms of the two-party system, their ideology, the GOP's ideology, which has changed in recent years, suddenly come into question because neither of them seems to be working. And you even have fragmentation of the parties, which you're starting to see. Democrat Party is what? I don't know. Is it radical left? Is it the moderates trying to make sure it doesn't become, you get the point. And then you go to the Republican Party, and all the old Reaganites and Goldwaterites that used to shape the conservative intellectual base of the party, that got upended a couple decades ago.
Welcome to Discourse with Christian. I'm your host, Christian White, and joining us today is market veteran Michael Oliver, the founder of Momentum Structural Analysis and author. And it's an honor to have you on the show today, Michael.
Good to be here, Christian. Thank you.
Well, as I say, there's always a lot going on around the world, particularly with the markets and such. And I figured we'd start off kind of with your latest thoughts as it relates to where things are shaking out.
Well, I think that a lot of the incrementalism we've seen in markets, where trends are zigzaggy and laborious, you know what I mean? That's about to change. And I think it's going to not just be in a few markets, but in quite a few. Some up, some down. I think the dynamics are going to become obvious to everybody. And I think it's going to shake people because, they're not used to that. And when you have that kind of market movement, it creates emotion. And when you have emotion, uncertainty, panic, you get the point. In other words, instead of this lazy, we'll take it day by day, suddenly you're scared because let's say you're an average guy on the street, and you get a retirement account, used to work for the state government, let's say, and all of a sudden, the only thing on your horizon really that's good for you financially is your retirement account. Hey, boy, look at it, it's up in a year, great. If all of a sudden you lose 20%, 30%, then suddenly, your sense of hope or optimism goes out the window immediately because, your wife's job is in jeopardy, et cetera, et cetera. You hear there's layoffs coming in your company, and suddenly your emotions come into play. And I think that's likely to happen very obviously in this coming year.
Absolutely. How about with respect to overseas and such, if you could perhaps share some of your thoughts as it relates to what's going on, whether that's markets, geopolitics, et cetera?
Well, we are a global world. Okay. So you can't take a major economy like US or China or Europe or Japan and sink it and it doesn't have consequences worldwide. It just doesn't work that way, especially US. And when I talk about the US, I also lump in there Japan and Europe are, supposed allies or whatever. Why we have allies? We're not at war, right? Okay, but anyway, that if you have a economic downfall, Japan is definitely struggling. We know that. Their debt market is imploding. The new woman who just got elected prime minister, who's sort of an echo of Trump, for example, she said, well, we have a demographic problem where there's not enough young people to pay for all the stuff for the old folks. Okay. So we're going to quote, print. Oh, that's the source of the underlying problem is we have a monetary degradation, especially in the Western world, where that which is in your pocket and you think is savings or money is decaying constantly. Like every 10 years, for example, one of the best charts to look at is to go to the Federal Reserve of St. Louis website and look for an M2 chart, money supply chart. Go back multiple decades. And look at this. It looks like a zoom. It looks like the Venezuelan stock market. Totally vertical, but meaningless because it's merely reflecting the degradation. Okay. Or go look at the Fed funds rate chart, the rate short end of the market that the Fed controls. And go back, decades. And you'll see that since 2008 through the present, so a decade and a half, a little more, the interest rate has either been zero for like 10 of those years, or it got up to 5 recently. But, that's even exceptionally low when you look back 75 years or so. Even that is hardly an uptick. Okay. So we've had free money and we've had a lot of it. And so what does that do? People spend it. It's, hey, this is great. Got more money, got savings. You actually don't. It's degrading decade by decade by, the money supply grows about 90% a decade. Okay. So, if you bought a stock at $10 one decade and it's 20 the next, you're not really making money. Okay. So anyway, that underlying reality is the key destroyer to not just U.S. bubble, stock market bubble, which is the beneficiary of that over the last 10, 15 years. But it's also true in Europe and Japan and some other countries as well. And when that breaks, it causes panic. And the money will move somewhere else. It always does. In other words, when the house gets on fire, it doesn't burn to the ground with all the money. The money flees. A lot of the money flees, and it goes into other markets. It always does. And if you look back in history, you'll see it went into gold every time. 2000 to 2002. In fact, beyond that, 2007 to 9. In fact, beyond that in terms of continued gold upside. And even in the 1929 to 32 bear market, which was a wipeout, like 80% drop in the Dow. You couldn't buy gold because the government banned it, but you could buy home stake mining. It was like 1,000%, So anyway, I think we're making that shift right now. It's out of the control of governments. It's a factor of what they've created. They created a bubble, monetary bubble. The money happened to go into the stock market. Now the investors, once they get doubtful, they'll move it. And it's already starting to move. You can see it. Look at gold miners, for example. Silver miners have been vastly underpriced for decades. Suddenly, zoomed off the page in percent terms. And it's only begun. So anyway, we're going to have an exciting year coming up. And you'll probably see a lot of that in the next couple months of this year.
Now, you mentioned about miners and such. Could you share perhaps other areas where you are seeing opportunities?
There's, first off, my prime focus personally, and I reflected in our reports, is I think that the monetary metals will lead the upside. Okay. I don't call them precious metals, gold and silver. Okay. Platinum is a precious metal. Palladium is a precious metal. They're not monetary metals. There is a distinction. Silver has been lagged to gold for quite a few years now in terms of its percent upside gains. Which, while gold has gone up, silver's gone up nicely too, but it's silver price right now, if you divide the front month December silver into the front month gold, December gold contract, you can end up with something like a 1.22%. 1 ounce of silver is equal to 1.22% of the ounce of gold. Well, if you plotted that going back 50 years to the mid-1970s, for example, heck, we've been in bull market years. There are points where silver price expressed as a percent of price of gold has been up to 6%. And in the 2010-11 bull market, it was up to 3.5%. Jeez. If it went back to a normal bull market ratio to gold, it could triple in value relative to gold from where it is right now. We technically analyzed that spread relationship. We call it a spread, a relative performance chart. Month by month, we plot what is that relationship, and then we also run momentum studies of it. It is at a point of major breakout, not far above where we are right now, where if the spread just gains a little bit more, it's going to blow through a technical ceiling that almost a kid with a crayon could draw. It's bleeding obvious, okay? And when you do that, the same thing happened back in 79 prior to the explosion, 4.5-fold explosion in silver in a span of 5 months, okay? Or in 2010 to 11, in the latter years of that bull market, and silver doubled in a half in 6 months. This time it's going to be even different, more so. And I'm getting my focus, therefore, in answering your question of what assets, okay? I'm going to focus on the monetary metals first, and then there's another one I'm going to suggest. But in the case of the two, gold or silver, we're arguing silver. Silver's been stuck. If you look at a simple price chart, monthly bar chart of silver going back 50 years, 1975 through 80 bull market. Then again, we ran up to $50 when in 2010 and 11, and it came back down. We've lived in a box for 50 years in silver, price range, a reality. If you go back and look at copper or lead, and go back the same span of time, they lived in a range from the 1970s, 80s, 1990s into 2005 and 6 in a perfect same kind of range. That was their reality. And when they broke out over the top of that range, in the case of copper, it was 2005 and 6, they quadrupled in a matter of a couple quarters. And then, there was some sell-offs after that, but you then lived in a new range reality that if you took the mid-range of that price reality from, let's say, 2005 to the present, and found the midpoint and went back to the midpoint of the old range, you're living in a range that's 4 times the price range of the old reality. Same is true with lead, except it happened at a different time. And I can show you many other commodities I can throw a dart at that did the same thing. What's going on with silver? Why is it still stuck in this 50-year range, considering that gold certainly isn't? Where it was in 1980 was 850. It's now 4,100. Okay, so how come silver's still trading around where it was in 1980? Well, there's some arguments made that, and they have validity, that government or banks associated with government are trying to suppress the price of silver. There may be other factors. But anyway, the point is that market has made a mistake, and we all know markets make mistakes. Look back at the dot-com bubble in the stock market. In hindsight, it dropped 82%, NASDAQ 100 did, from 2000 to 2002. So when that bubble broke, it dropped 82%, despite the validity of the internet being revolutionary. Okay. It made a mistake. It got priced too high for too long. And when it corrected itself, it went whoosh. Okay. Most of these changes into new realities occur quickly because they're based on prior long-term mistakes. And when a market suddenly realizes that, oops, I was living in a false reality, you don't take 5 years to get there. You do it quickly. I think that's what's about to happen to silver. And my guess is that when that spread relationship between silver and gold breaks out, and again, we're right below the levels that needed to do that. At that point, I'd set my clock and assume that over the next couple quarters, you're going to see silver go up triple to quadruple in price, meaning 150, $200. That won't be the end of it. I think we're going to level off. In other words, it's not like you're going to peak and collapse or something. What's likely to happen is in that period, we're going to enter a time where other assets threaten so severely the population, not just here but elsewhere, that things change. We may not have central banks anymore. We may revert back to a gold-backed currency. Heck, even the Chinese are on the edge of that. Meaning not a fiat currency that's printed, whatever they want it to be. The quantity, they change it overnight. They set the price level, interest rates set by the government. It's like having socialist money. If they control the corn market and produced government only and government licensed farmers produce corn, they determine the quantity produced, and then they determine the price of it, we'd call that socialist corn. Okay? So we have an essential commodity called money between you and me to make a transaction, or me and some guy in another part of the world to buy his product. It's an exchange of a commodity, a money unit. If that thing's degrading, then, somebody's getting hurt ultimately. Anyway, so that's the kind of world we live in. And I would focus right now mostly on silver. But then there's another broad category, and this is for people who don't want to be so narrowly focused as I personally am. Commodity asset category is very, very cheap relative to anything. It's even cheap relative to its own historic prices. Like the Bloomberg Commodity Index is a very good mix of commodities, base metals, grains, energy, et cetera, et cetera. And it is trading at a price right now of 110. Just had an upside breakout in October by our metrics. Our momentum metrics said buy it. It closed around 107. We've now gone up a little bit more. No headlines, no fireballs, just a subtle upside breakout. It was trading at 237 in 2008. It's trading at 110, and yet people are screaming about high commodity prices. Yeah, they're higher than they were a year or two or 3 ago, especially back in 2020. It got down under 60 on the Bloomberg. Right now, it's not quite double that price. If it even went back to its old price high of 2008, it would be more than double where it is right now. And it's largely due to investor emotion. They love the stock market. It worked. Okay, the Fed pumped money and it happened to go in that market. And boy, if you just got on board and got dumb, you got rich. Well, actually, you didn't, but I'll explain that in a second. But it looks to us like we measure technically the behavior of the commodity complex in and of itself, its dynamics, its bottoming. In fact, it said that in 2020 to 22 rally that it had. It says, I'm out of here. Okay, it left behind that low. I think it's starting its second major leg. And I think this one is going to be correlated on the tailwinds of gold. Finally, it'll join gold again, which it doesn't always do. And also with flow of money out of the stock market. And we think the stock market has been in a topping process since late 2024, early 2025. The marginal new highs we've made recently, 10%, 11% above the January high of this year, for example, is a teaser. It's not a sustainable move. If that market's topping, that money is going to seek other places. And it won't just be gold. It'll be places that are perceived to be, one, low risk, high reward, commodities, and companies related to commodity production. That'd be farming related, fertilizer, base metal miners, you go on and on, energy companies. All of those would be very interesting and probably good places to be in the stock market, even as the stock market turns down. They don't correlate well to the stock market, no matter what time you look at. So if the market goes down, I'm suspecting that will be one arena in the stock market that actually goes up, commodity based. And so that's a good, and that looks like a situation that once it shifts could last for a decade. So I'm talking investment grade asset class shift. So I think that's is underway right now, and it's not yet smacked people in the face, but it soon will.
Now you mentioned about central banks being kind of a thing of the past potentially at some point. Can you kind of dive into that for us?
What's the Fed been around? One long human lifetime, 100 years, okay, thereabouts. And there are a lot of academicians, even those that intellectually support the notion of a central bank, okay, who are a little not real happy with the Fed. They don't see it as being in a leadership role. It sort of follows the events. And the history of it is really bleeding obvious if you'll just look at charts. When the stock market turns down, after having been fed monetarily and stimulated into the bull bubbles we've seen over the years, the 29 bubble top, mid 70s, 2000 .com top, 2007 mortgage crisis top. When it breaks, reality takes over. And even if the central bank then comes in and tries to stimulate it back to life to stop the bear market, because all the data points go with the stock market. So, they've got an excuse at that point. It doesn't work. Investors don't go that way. They say, no, it just doesn't work. They cut rates all the way down in all those bear markets that we talked about. It didn't help a bit. They still went down huge. The money went elsewhere. So that's one of the factors that when that breaks, I think things like commodity-related stocks, gosh, I got to have some gold and silver. My buddy down the street told me about this a year ago, and I laughed at him, and now I'm looking for a 100-ounce bar of silver, okay? That's when that suddenly changes with emotion. So, if you're a latecomer, that's where you're going to be, and that still will be good because I don't think the big move has really yet occurred, for example, in silver. nor in commodities. So I think it's a good place to consider as a new place to be for probably the next decade.
And as it relates to the current kind of financial situation, the bubble and things of that nature that we're in, some have speculated that it's maybe fringe elements have speculated it's kind of a controlled demolition to some extent. I don't know. I'd love to hear you share your thoughts with the audience as it relates to that.
The Fed does buy assets. We know during the COVID time, they bought ETFs, just like the Japanese government. Japan's the master of this. They've been doing it since the 80s, QEs, et cetera. In fact, Bernanke, and they've been cutting rates. In fact, they cut rates in September of 2007. It was a surprise rate cut. And it occurred even though Bernanke pumped and everything in front of a camera said, no, there's not. Mortgage crisis totally under control. Okay, right. So, but anyway, he cut rates by 0.5 point in mid-September 2007. And about 3 weeks later, the market made a new all-time high, S&P, only about 100 points higher than where it had been, so a handful of percent points. That was the top. They cut rates all the way down. And then finally, after the summer of 2008, when we lost Lehman Brothers and all kinds of other companies and all of these surprises, not really surprises, but, to most people. And after the stock market had a very bad month in October of 2008, a full year off its high, had like a crash month, 30% drop. He came in with QEs. He said, I'm going to take a note out of the Japanese textbook and start QEs, quantitative easing. Anyway, so the Fed don't be surprised if the Fed does buy assets. Sometimes it works when the market hasn't completely topped yet. But they outright buy, same thing you as an investor could buy. So it's not just monetary fooling around. They'll come in and buy ETFs of things they want to protect. Ultimately, this won't work. It'll just create more liquidity, and it will go somewhere. And we know where it goes. It's already going there, monetary metals, because there's a suspicion that fiat currencies just aren't working, guys. And if it's not working, and once you get into that sense of emotion and panic, where, gosh, it's 52 card pickup, you say, well, what works? And you revert to what your granddad told you, gold, silver, and you have a sense of safety then. And that's when, when you have emotion mixed in with the data points, that's when certain institutions are in jeopardy. They say, hey, we don't need it anymore. It didn't work. So don't be shocked if that occurs. In fact, I'm predicting it will occur. The question is what circumstances will help provoke it. And I can see them out there that would cause the emotion to throw the cards in the air. And I think that's coming too. Along with the market. But it'll probably be market stuff first. And then you'll start to get these sideline headlines that you didn't expect.
Now, as it relates to the market and the flight to safety, if you will, and I do think it is very fascinating how one can kind of more or less decipher geopolitical stuff going on, more or less with regards to where money is moving, so on and so forth. And I, I should say, some speculate that we are already in kind of the next global conflict, if you will, more or less. And as it relates to that, I'd be curious to kind of hear your take on it, and then perhaps how that would impact the markets and et cetera.
My assessment, and I'm not a foreign policy expert, if there is such a thing. I don't think the Chinese want a war. If you think about it, the Mao days are over. Even that changed in the early 1980s, and where they privatized it. They allowed agriculture to be privatized instead of run by the state. Monopoly control over crops, and more and more and more, and even their highways are private. Instead of a government tolled, instead of getting taxed to pay for the road, you actually pay a toll to a company that did the road. Okay, So it may seem like, gee, that's more, but actually it's probably less than if you paid the taxes. But anyway, uh, there's a lot of young guys who've ascended in the party structure over the decades. They're not old ancient Maoists, okay? Uh, and they're corporate linked, a lot of them. And these major corporations are totally dependent on world trade. They don't just produce stuff for China, they sell their stuff everywhere. And so if there were a global conflict and their markets were shut down for them, ability to sell this, that, or the other, it would collapse them. And so they no doubt put internal pressure within the party on Xi to not be a dummy. Okay, and there was a recent example of that. There was the COVID riots in China a couple of years ago, where the government put troops in the street. You were stuck in your apartment building, couldn't get out unless at certain times of the day, et cetera, et cetera. Total control of street movement of humankind. Okay, all to protect them. But then there were riots, and they got big to the point of, a bit beyond the control of the government. They were going to shoot them. That wouldn't work. And a lot of these upper guys in the party, who no doubt were business linked, probably put the word up the line and said, "Xi, no, let's stop this." Like overnight, you could feel the pressure building on Xi, and stopped it immediately. You're free to go back in the streets. So he succumbed to the reality underneath the surface that, this isn't working. We can't. And the same might apply, for example, to foreign policy. Why would they want to generate a war, a physical war, in that type of country? And you go look at the cities in China, most of the names American public are not even aware of it. Tens of millions of people live in some of these cities, and they look like something that was built on a foreign planet. They're certainly not communes. There's not people lined up with bowls getting their daily ration of meat or bread, as a la the Soviet Union back before the 1980 period. It's not a commune. Something's wrong. I have a very close associate, and I cannot mention his name, who has done a lot of business in China decades ago, and is well known in a certain industry as sort of the king of it's in the natural gas sector. And he, in those days, just back in the 1980s, I think it was, he told me that Shenzhen, which used to be a fishing village in China, just a small little fishing village. Now it's like a city from another planet. The Chinese allowed it to emerge. They lessened any regulations on this city, and it's now one of the tech capitals, okay? And it looks like something that your jaw would drop if you saw it in a matter of some decades. And he asked a guy who was high up in the party then, he says, "Why do you guys call yourself Communist Party?" Because even then it was obvious they weren't really Maoists, okay? And the guy just said, just tradition. So when you hear Republicans or Democrats who say the Communist Party of China, well, yeah, that's what they're called. Yeah. But when you look at the reality in the streets, it sort of doesn't fit. I don't see Mao. Okay. Stalin, it's not there. Yeah, you have a dictator president, but he's not to the extent of totalitarian is different from a dictator. A dictator is just sort of there to keep power and keep some sort of base under himself, but he's not trying to control the everyday life of, you get the point. Anyway, I think it's less than likely that we have a global war unless we provoke it. So anyway, that's my comment. And again, I'm not a foreign policy expert. It's just some observations I've had over the years, and they sort of make sense, I think. And therefore, I'm not really concerned about that issue. Now, what we do, I don't know. I don't know what Trump's going to do or some other guy, in terms of, if all of a sudden our economy goes into the hole, sometimes governments do stupid things. But right now, my focus is on the economic forces that are at work. And I'm less concerned than most people about the global normal war. Okay.
Well, as it relates to that, I would, I'd like to ask how you, well, one of the questions that I have been asking guests on the show lately is kind of how would they define kind of the power structure? Obviously, in this case, you're mainly focused on markets and things and finance, things of that nature. How would you define kind of the hierarchy of if you will, given your tenure and such in the industry?
The hierarchy, you mean in politics or
Yeah, just in general, as far as like people mention central banks, BIS, City of London. You hear things of that
yeah, well,
nature.
and again, what I think is going to happen is a ground up revolt, intellectual and emotional. There's always academicians who do have influence, in governments. Some of them get incorporated into the governments. Some are left, some are right, et cetera, et cetera. But when you get the in the street impulse, which is not always there, it's not always a power force. But when you hurt people, and already we know the reality of what's going on now. I mean, if you just pay attention to the news, I mean, the credit card limits are up to the max. Non-payment of credit cards are, in terrible shape. Delinquency rates. Uh, Average guys hurting, and I'm not talking just lower income, but middle class are hurting, and this is not getting better. And once that becomes painful, and what would help do that would be the break in the stock market, because again, a lot of people have retirement accounts, and they're just enough maybe to live on, maybe, or maybe I got to go work at Walmart. I'm 70, et cetera, et cetera. When that stuff hits the fan, all norms of who's in charge here or there suddenly go out the window, and the norms of the two party system, their ideology, the GOP's ideology, which has changed in recent years, uh, suddenly come into question because neither of them seems to be working. And you even have fragmentation of the parties, which you're starting to see. Democrat Party is what? I don't know. Is it radical left? Is it the moderates trying to make sure it doesn't become, you get the point. And then you go to the Republican Party, and all the old Reaganites and Goldwaterites that used to shape the conservative intellectual base of the party, that got upended a couple decades ago. And Trump has more and more created a party and reflects his views himself. And so it's no longer really even that old GOP, it's a different one. And now even that's getting fragmented. You've watched the news, even some people who are supporters here say, I don't like that. I don't like what you did there. I don't like, suddenly he doesn't have the uniform course. So both parties are like fragmenting a bit. And as these events unfold, they'll fragment it even more. So it wouldn't surprise me that you get some third parties that rise that are actually viable, where you end up with a multi-party system where you have to make deals between party A and B to maintain enough power base. You get the point. Okay, this is true around the world in many places. So a lot of things like that could happen, expected. The old norms are got to get shattered because they've been distorted for so many decades, at least 100 years, since Hoover on to the present, in terms of government manipulation of economic realities, with the consequences that go with that. And suddenly, that if it's perceived not to work, then it's again hands in the air. What do we do now? But the first thing is hands in the air, and that creates a lack of certainty, emotion, pain, and two of the great solutions out there to make you feel less painful are gold and silver. In fact, let me make a point here. Ongoing decay in the money unit. In other words, the real buying power of the dollar. So when your granddad built a house, it cost him $4,500 median home price. When your dad built a house, it cost $45,000. If you want to build one, median home price now is $450,000. Okay, what does that reflect? Ongoing decay in the money unit. If you bought exactly 25 years ago, gold or the S&P, which one's doing better? Okay, the money's decayed dramatically over that time, 4.5, 5 times multiple gain. S&P's gone up almost exactly that much. It's matched the decay in the money unit. Gold's gone up 16-fold in that 25 years. Beat the pants off the S&P. Yes, there have been bull markets, bear markets in both. And yet gold is ripped ahead in real buying power versus the dollar unit. versus the S&P. So in terms of real investment reward, buying the stock market might look good on a chart, but in real dollar terms, you just match the decay in the piece of paper in your pocket. That's all you've done. Loaf of bread's gone up as much. Should have bought a truckload of frozen bread. You just thaw it out and it's just as valid, and you get the point. Anyway, so that's the kind of reality we're about to face. I think we're going to face it suddenly, and you want to be on the right side for your family.
Absolutely, absolutely. And I wanted to mention too here before we wrap up. Of course, your book that you have, the new libertarianism, anarcho-capitalism. I'm not going to pretend to be an expert by any means in that. I have heard people mention that form of uh, philosophy and such. I'm thinking of Doug Casey. If you could kind of unpack and share kind of your take on it.
Well, I wrote it in 1972, 73, master's thesis in political philosophy. Okay. I published it in 2013. Back then in the early 70s, before most academicians even knew Murray Rothbard, who was basically considered the founding intellectual under which the modern libertarian movement, the von Mises Institute in Alabama, which is a think tank, is based entirely on his concepts. He was an economist, political philosopher. I married the basic philosophical concepts of Ayn Rand, removing her political philosophy, which was basically just sort of the old-fashioned Goldwater type limited government thing. In other words, she didn't really make much change to founding fathers' notions of government. Yeah, let's have it. Let's try to hold it back. Let's try to defend against it becoming too big. But yeah, we got to have it. Okay. I removed that from her philosophy and put Murray Rothbard's economics and politics on top of it. So there's an intellectual structure, basic philosophical concepts. You move up to politics and economics. Okay. And at the time, I knew Murray Rothbard. In fact, I interviewed him for a paper I used to run at that time, a libertarian paper back in the early 70s. And we communicated a lot via mail and at one time in person. He told me in a letter, I told him that I wanted to quote him, could I have permission because this master's thesis was also going to be published at some future date. And he said, oh, absolutely. And says, yours will be the first on the subject of anarcho-capitalism. In fact, that term didn't exist then. Libertarianism did, but anarcho-capitalism did not exist. And there was a debate later, and I wasn't involved, didn't care. In fact, I didn't even know what was going on or who founded the term. Okay. And mine was the first book on it, and he used the term actually in an essay somewhere in one of his earlier writings. So anyway, he and I both coined the term and defined it as it's different than just libertarianism. Okay. Well, suddenly now, as the world starts to fracture internally, countries and countries, you had the seventh biggest economy in the world used to be called Argentina. 100 years ago, 75 years ago, the seventh biggest economy in the world, and then became a backwater country because two rival political parties in Argentina basically dominated it for human lifetime. They're both socialist directed in terms of the type of controls they impose, competing controllers, let's call them. And it wasn't leading to good things for the average guy. And what's so funny is this guy named Javier Milei, an economist, an academician, really, looks like a rock and roll star, a lot of black hair, really cool looking guy. He ascended, he got elected president about 2 years ago. And it was largely the youth vote. You would think, this is pro-capitalist. He described himself, by the way, not as a libertarian, but an anarcho-capitalist. And his goal ultimately would be to dismantle the state. Not overnight, take piece here, piece there. And one of the first things he did, the youth vote went for him for the same reasons we were talking about, the sense of desperation. They were sick and tired of this constant process of economic pain, high rental costs off the page, even though you had a, quote, government-controlled rental. One of the first things he did, he dismantled the government agencies in charge of rent control. And lo and behold, within a year, rent prices came down to levels that people can accommodate. Boom. He took inflation from, I forget the exact number. It was a high double-digit level, way up there, okay? It took it down to single-digit percents within a year. Okay, because inflation is a ripple effect, a wave effect of statism. So anyway, here's a guy who actually said, "I'm an anarcho-capitalist." I can't believe it. In my lifetime, somebody's actually ascended, and so far he's having in the street type results. And recently there was an election in Congress down there, and sure enough, his party advanced further allowing him to continue to do what he wanted to do. So it was an echo election, patting him on the back again by a lot of young people who were desperate about their future and didn't like what had gone on all during their childhood and their parents past. So this is the kind of thing that can happen when desperation sets in. Old ideas get tossed. It's a good time.
Yeah, I'll add to that and mention that I feel like we well, I don't want to say like a doom gloom kind of a thing, but I definitely feel like society is, has been kind of, I don't want to say in a free fall kind of state, but there's certainly been a decline in. And I think it'll take some momentous event to then have the pendulum swing back in another direction where people get back to more of a traditional values and reevaluate the status quo that they've been living in. And it is interesting to read about from many decades ago, how people lived and operated, the politics, the markets, et cetera, and kind of the zeitgeist today. And I think it's really fascinating.
Yep, and the events will help precipitate the intellectual changes because people have their hands in the air. Hey, this isn't working. What does? Okay, uh, it's not some academician from above coming down telling people how to make it work. It's reality makes them think we've got to find a better way to make society work. To the benefit of everybody, not just the elite. Anyway, um, I'm not involved in political movements or anything now. My focus is on markets, and I do not allow my intellectual background to ever interfere with my assessment of markets. There are times when the stuff I ultimately might be in trouble, might be going up, and we'll acknowledge it. We've turned bearish and bullish on the stock market multiple times over the last 30 some years since MSA was founded. Um, but ultimately, those bigger macro underlying events and ideas will come into play.
Michael, I appreciate your time. How can people learn more about you and get in touch with you?
So olivermsa.com, momentum structural analysis. Go to the site, take your time. We discuss our unorthodox technical assessment process, which is not what you normally call technical analysis, price charts with lines and stuff. We do momentum analysis of price, which is different. It sort of separates us to some extent from the distortion caused by the money unit, uses a sole expression of what the price is, where is it going, etc. Anyway, take your time and request some sample copies if you'd like.
Awesome. Well, I will be uh, devouring your book here to better hear your thoughts on it and to educate myself. And I appreciate your time and looking forward to having you on sometime down the road.
Thank you, Christian.
Quick ask: over half of you who watch the show regularly haven't yet subscribed. If you've enjoyed the show, you're finding value in it, subscribing is really the best way to support the channel. It's, of course, free. It literally takes 2 seconds, and it lets the algorithm know that this content matters. And of course, my commitment to you is going to be that I'm going to continue to bring on great guests, refine those questions. And of course, I'm always receptive to your feedback. If there's certain people that you'd like to have on, or certain questions, or this, that, and the other that you'd like to have as part of the show going forward, things of that nature, please let me know. I'm pretty easy to access. Anyhow, that's my commitment to you. If you can subscribe, that would mean a lot. Thanks.